Hey guys, my name is Colin and this is Colin Talks Crypto. In this video, we're going to be talking about the longest and shortest bear markets. I think this is very fitting because we are currently in a bear market right now and a recession in the USA and the world. And there's a strong correlation between Bitcoin and the stock market. There's some additional information on the time frame of things, which I'm going to show you right here. So I'm going to read this to you, and then I'm going to show you a couple of charts. And I think that you will find this very interesting for why it is possible that the economy has not finished its descent. And I'm not saying this to be a bear or a bearer of bad news or a FUD or anything like that. I just want to approach the market intelligently and not be caught off guard. So let's look at what history has showed us and let's think, could we be done? Could the recession be over? Let's read this. The technical definition of a bear market in stocks is a drawdown of 20% or worse from peak to trough. At its bottom this year, the S&P 500 was off nearly 24% from its all-time highs reached in early January. So we are in a bear market. Going back to the end of World War II, the US stock market has experienced 13 bear markets, including the current one. In the previous 12 bear markets, the average loss was 32.7%. It took the stock market an average of around 12 months to go from the peak of the market to the bottom. It then took roughly 21 months on average to go from the bottom back to the previous peak. So the average time for a round trip in the bear market to make it back to break even has been less than 3 years over the past 7 decades or so. As with all historical market data, there can be a wide range of results around those long-term averages. Each bear market is different, but investors can glean some lessons by looking at past market crashes. Here are some lessons from historical bear markets. So I'm going to show you 2 charts here. The first chart shows the longest bear markets since World War II. So this is about 70 years of data. And then the other chart is the shortest bear markets since World War II. And let's start with this one. This is the best case scenario, the shortest bear markets. They average a 26.6% drop. And these are the smaller bear markets. Now, again, to my last video's point, I don't think that we're in a smaller bear market when we've increased the money supply of the United States of America by $5.2 trillion in a period of about 1 year. To put this in perspective, $5.2 trillion is the total cost of all our wars since 2001 and is greater than even our most expensive war in history, World War II. So let's pick sides here. First of all, would I classify the current recession we're in as likely to be among the shortest bear markets since World War II? Or do we think it's likely to classify the current bear market and recession that we're in as among the largest and longest bear markets since World War II? I believe and feel strongly that this is one of the longer bear markets we are going to experience because of the magnitude, period. The magnitude. You cannot introduce that much money to the monetary supply without it being a seriously impactful bear market. I think it's pretty clear to say that the odds are in favor of it being among the longest bear markets since World War II. So the question is what's the percent decline we're going to see from the top? Now, this article was written a couple weeks ago, and at that point, we had seen already a 24% drop. But you'll note that that actually falls in the category of the weakest bear markets in history. So if we classify the current bear market as probably one of the longest bear markets, or that it will become one of the longest bear markets in history, then the percentage decline on average will probably be about 43%. Now, it could be 26%, it could be 56%. But if we're at 24% right now, right here, then we're not yet done, in my estimation. I don't think we're done. And As we know, Bitcoin is heavily correlated to the stock market. So if we're going to see a further decline of legacy assets, it's likely we're going to see another drop for Bitcoin as well. I don't think the recession is over. And I think that it could take 6 to 12 months to fully play out. This could be a long thing. So you have to be patient. I want to show you this very interesting column right here, right to the right of the percentage decline. We have peak to trough months. So this is from the very top to the very bottom of the entire cycle of the bear market for any of these given cycles. What is the average number of months? 18 months. You have some outliers. You have a 4-month one, but you have on average, actually the lowest one aside from that 4-month one is 17 months. You have 18 months, 21 months, and 31 months from peak to trough. The longest one was the dot-com crash in 2000 to 2002. 31 months. And the housing market crash of 2008 was 17 months from peak to valley. How long have we been in a decline? I pulled up the S&P 500 chart. Well, the peak was December 31st of 2021. So basically, the start of 2022 onward has been a bear market. How many months has that been so far? If the valley was truly in mid-June, right here, from December 31st, we had a peak of the S&P 500 to a bottom in June 2022. That would be 6 or 7 month long from peak to valley. That would be shorter than the average shortest bear markets since World War II. Just to put that in perspective. So what does that tell us? That tells us that we probably have some more to go. We are really just scratching the surface potentially. This is just like a reality check. So my money is on that we have not finished seeing a downward move. I think that we're seeing a nice relief rally. It's a beautiful relief rally. We might see Bitcoin hit 30,000, might see it hit 31 or 32,000 at the absolute top. There's a lot of resistance there. I think that's as high as we'll see. We may not even see that high. And after that, I think we're going to see a lot of downward moves, not just because of that resistance, also because the legacy markets are not done correcting for the gross manipulation of the money supply that occurred in 2000 to 2022. It just doesn't look like it's that short of a cycle. And this article backs it up 100% when we have the average being 18 months. So guys, we could have 10 more months to go. We could have 3 more months to go, 5 more months to go. But do we really think that the bottom was last month or a month ago? So I think I beat that horse dead. I think you guys get it. Plan accordingly. I'm not saying sell now because probably a lot of that selling should have taken place earlier. I'm just saying be prepared for what comes next. I have some cash on the sidelines. I am looking to deploy it when we do see further capitulation in the stock market. This relief rally is likely just that. It's likely just a relief rally in my estimation. And time will tell whether I'm right or wrong. And that's what investing is. It's trying to be right more than you're wrong. And you're not ever going to bat 10 out of 10 swings. You might be lucky if you get 7 out of 10, and that's all you need to be, more right than you are wrong. So this is my personal guess. Take it with a grain of salt. I'm just trying to present to you my logic for why I think what I think, why I think that this is a relief rally, and that we are going to continue to see new lower lows as the months unfold because of things like the M1 money supply and of things like the historical amount of time it takes for the longest bear markets in history to properly unfold to an actual bottom. I want to leave you with these interesting words. They really rang true to me. Research shows that losses sting twice as much as gains bring us joy. So the longer you are underwater in the market, the more suffering involved. That suffering can often lead to mistakes by selling at the worst possible moment. Patience is a virtue during bear markets because sometimes it takes stocks a long time to make up for their losses. So guys, I want you to take that truth home with you, sit on that, marinate on that. Definitely don't be a victim of selling at the worst moment possible. That can happen from having too big of a position size and sitting on it for a very long time and writing it down and sweating more and more, and then finally capitulating when you feel like you can't take the beatings anymore. And then what do you have when you look back? You sold at the bottom because the suffering was too great, because the amount of time that you were underwater in the market involved greater and greater suffering, because the losses sting twice as much as the gains bring us joy. So plan accordingly, guys. I will be with you on this journey. I haven't gone anywhere, even if I make videos a little less frequently, because the macro scene isn't changing a whole lot. But I am following it, absolutely. And follow me on Twitter for more frequent updates. Colin T Crypto. That's my Twitter account name, Colin T Crypto. Have a great day, guys, and I'll talk to you again soon.